So here's the thing, guys. There are 5 key bad habits which are holding you back from building meaningful wealth in crypto. These are 5 bad habits which I've seen time and time again, which people continue to fall into these traps. I'm going to break down these 5 things and share with you ways in which you can avoid these bad habits. The first one is margin trading. Margin trading is when you take out a loan from a brokerage or an exchange to start off with more capital than you originally had. So let's say I'm starting out trading with no money. I can go ahead and take out margin, right? So I can start off with, let's say, $100 and margin up to a larger amount, which means when I trade, I can gain bigger returns. But this is the fallacy. A lot of people rush into taking out margin. But the problem with margin is you run into trading with amounts which you've never become accustomed to. That is why it's far better for you to organically build up your trading account. Do not fall into the temptation for margin. All margin does is speed up your successes and speed up your failures and gives you even bigger catastrophic failures. So there are so many people I know that have blown up many accounts who have fallen into big problems, all due to margin and margin calls. Next up, leverage. Leverage. This is a critical one which gets a lot of people into problems. Similar with margin, this can get you into a whole heap of bother. For those who aren't familiar, leverage is when you take out position, but you can take out a 5, 10, some DJs even take out 100x leverage on a trade. Now what that means is if Bitcoin is moving 10% in a day, but you've taken out a 10x leverage position, you can benefit from a 100% move. And that's really attractive to traders because guess what? Humans don't want to wait. Humans aren't patient. They want everything today. They want 100% return today. And so they often take out these leverage positions. But here's what they fail to understand. What they fail to understand is the leverage also applies to the negative situation as well. If the price moves in the other direction, you're going to get wrecked, you're going to get liquidated. And it's no surprise that daily there are millions and millions of dollars of liquidations occurring. And guess what? You open yourself up as a victim for people who are targeting liquidation prices, because guess what? Market makers are targeting you. I spent my time working in traditional finance, understanding how the institutional market works. They love it when retail investors like you and I place margin and leverage so they can sit there waiting for your data, because remember, they see your data. They see exactly where you put your stop loss, exactly what you're doing, what your liquidation price is, and they can go and hunt the areas with big chunks of liquidations waiting to happen. So whenever you look at it and see, is the market manipulated? Why are we seeing these kinds of spikes? It's because they can see exactly how much leverage you're taking out, what is your liquidation price, and why would they not go and grab that money for you? So definitely my big no-no and a bad habit which is holding you back is leverage. And both of these points 1 and 2, link back to this instant gratification, right? You want it now. You don't want to earn your stripes. You don't want to earn your stripes to become a pilot and go through the training. The years of training it takes to become a doctor or a lawyer or a pilot. You just want to become this professional trader today and get 100x today. And guess what? You guys are the wreckage that are fueling the bonuses of these huge exchanges and market makers. Next up, and this is one you're gonna have to continually battle with throughout your time in investing, is FOMO. And you've got to learn how to avoid FOMO. FOMO is one of these things that will get you into a lot of bother. So many people that I've bumped into jump into crypto positions simply because they want to chase the market. On this channel, we call it green candle disease. You should not wait for the market to be pumping crazy green and then jumping into a position. Buy in a position of strength, sell from a position of strength. Generally, as a rule of thumb, wait for the markets to have major pullbacks. Wait for people to not want that project. But you look at the fundamentals, you see everything is sound, and you buy when the markets are fearful. But it's not as straightforward as that. When the markets are booming and everybody is saying Bitcoin's going to go to $100,000, this is going through the, this is going to moon. It's really easy to fall into that FOMO trap. So this is something you have to continually remind yourself, manage that psychology. And the quicker you can park the FOMO and start being data-led, the sooner you'll really start to see significant improvements in you building your crypto wealth. Bad habit number 4, and that is investing too much. Now this sounds a little bit odd, right? Well, how can you invest too much? Well, guess what? Somebody who invests more money than they're willing to lose ends up making irrational decisions. For example, you could have high conviction in Bitcoin over the next 5 years and you buy some Bitcoin today with some money you had. But if that's money you need for rent next month, you couldn't care less what Bitcoin is going to be doing 5 years from now. So in that situation, you find yourself constantly panicking, jittery, in the market, out the market, taking weird losses because you don't have a long time frame. And it all spans from the fact that you needed that money too badly. So you'll hear people say it time and time again, only invest what you're willing to lose. Now that's not because you expect to lose it, but when you do become comfortable with the notion that you may lose it, then finally you'll be able to detach your emotions and actually let the investment ride. And that's the key. There was a study done on the traditional markets many years ago, and they found that the people with the highest returns in the traditional markets were those who forgot the login to their brokerage. Yep, it shows that time in the market is far more important than timing the market. So if you're just a part-time investor, somebody who wants to invest and build wealth in crypto, but you don't want to be this trader, you don't want to go into all the detail, then you've got to learn to detach your emotions and only invest what you're willing to lose. If that's $50 a month, great. If that's $10,000 a month, fantastic. But it's got to be something that once you put it in the market, you're not constantly looking, oh, I need to take that out. I've got rent due. I need to go on holiday in 3 months from now. I really need to cash out on that Bitcoin position. And last but not least, a lack of conviction. If any of you guys have been watching my content for a while, you will know that conviction is one of those buzzwords which I constantly try to hammer down through my content. It's really critical that when you pull the trigger to buy or invest in anything, whether it's stocks, whether it's real estate, whether it's crypto, which is what we're doing on this channel, it's imperative that you have true conviction. And what do I mean by conviction? Conviction doesn't mean your friend or your brother or your uncle or your cousin or the Uber driver or anybody else told you to buy Bitcoin. Conviction is you doing your research. It's you understanding the value of what you're investing in. It's you deciding on a thesis upon why you think it's so unvalued now and why you think the price and value of whatever you're investing in will increase over a certain period of time. It is not hit and hope. It is not buy what your friends are saying. It's not buy what's trending or buy whatever's pumped the largest yesterday. That's not investing. That is a lack of conviction. And here's the thing. If you do not have conviction, there's little chance you're going to succeed outside of pure luck and gambling. Let's play this out. Let's say I gave you the exact trades which I'm placing. The exact trades. I tell you the amount of crypto I'm going to buy, when I'm going to buy it, and when I'm hoping to sell. It's irrelevant if you do not have the same conviction as I do. Because let's say you wake up one morning at 5 a.m., you wake up, you check your phone, and you see that Bitcoin is down 25%. In that moment, who's going to help you? Who's going to stop you from panicking and pressing the sell button? Nobody, right? So you can take the exact same trades that somebody who's successful in the market does, and you can fail when they can succeed. Because they've got the conviction that when the market gets tough, and particularly in crypto where you're seeing 95% drawdowns, they're able to weather that because they've got a long-term thesis. They're not just buying because their friend told them. They're not just buying because it's the popular thing to do. They've done their research, they've done their homework, and when they do buy into a project, it's because they truly believe in it. So there you have it, guys. Those are my 5 worst bad habits I see in aspiring crypto traders and investors. Let me know if you suffer from any of these down below. I suffer from these regularly, and it's sometimes not just a fact of do you suffer or do you not, but it's trying to make sure you stay away from those bad habits. Whenever you notice it, whenever you see some FOMO kicking in, make sure you nip it in the bud. Whenever you see yourself taking out a little bit of leverage, remind yourself not to. If you have margin on your account, settle it. If you notice yourself not having enough conviction in the projects you're buying in, ask yourself, what made me buy it? Who made me buy it? Was it a video? Was it an influencer? Was it a friend? Was it a colleague? Why did I buy it? Why did I not do my research? And if you can start working on these 5 bad habits and eliminate them, you're going to become a far better crypto investor than you were with these bad habits. Hope you guys enjoyed. Don't forget to smash the likes. Don't forget to subscribe. As always, check out the links in the description, and I'll see you in the next one.